Okay, we got one little stray topic here, and this is a short lesson, and we're going to talk about the net investment income tax. And this tax lays over all your investment income, or lays on top of, more or less. The net investment income tax, or NII for short, is not truly a tax. It really is not in the purest sense of the word. It was enacted as part of the Affordable Care Act, or as we commonly call it, Obamacare Act. And the intent was to have higher income taxpayers pay an additional 3.8 tax on their investment income to help defray some of the costs of health care in the United States. And so that's what it was in. Now, what's higher income? This is very interesting in the tax code. Most things in our tax code increment with inflation. Net investment income tax does not. Once it was set at a fixed fee. And higher income taxpayers are those with modified adjusted gross income. And basically that's your wages plus your interest, dividends, capital gains, and anything else you earn, less some of the deductions like self-employed health insurance and qualified PANs, meaning IRA or SEP contributions, if they are deductible for you. That's your modified adjusted gross income. Greater than $250,000 for married filing jointly taxpayers, or $200,000 for single taxpayers. So this tax was not aimed to what the government considers middle America, but depending on where you're located, that is middle America. So a lot of us pay this tax. So remember, this doesn't change. So this tax came into being about 5-6 years ago. It hasn't changed that number in that time, even though we may have inflation. So let's talk about the income that's subject to the tax. Anything investment related is a way to think about this. Interest, dividends, rents, royalties, income from passive activities. What are passive activities? Passive activities would be rental real estate. We've already talked about rents being subject to it. Income from those publicly traded partnerships that we talked about previously, and income from any other private type investments. So if you make the decision to rent out your former apartment and the rental income exceeds your expenses, then that income would be subject to this tax. The other thing that's subject to the tax is gains from the sale of securities and properties are subject also to this tax. There are a couple of property exceptions that are not part of this course, so we'll just not talk about them because they're really not pertinent here. They are special event type things. Now, partnerships and businesses. If you are a part of an operating business that generates interest as ordinary course of business, then that is considered business income and not subject to this tax. Again, if it generates interest, dividends, and capital gains as part of its ordinary course of business, unless it's a trading business, it's not subject to this tax. So a good way to think about it, and let's summarize it up real quickly here at the end. Income from operations, no net investment income tax. Income from an investment, net investment income tax. Any kind of rental real estate, passive income, subject to net investment income tax.